Welcome to the Full Tracy Money Good Commentary. This is Owen Tracy recording, and it is 4:02 p.m. That is Central Time. Today is June 24th. Well, oil prices were down again in here today, following through on the big downward dynamic that we had yesterday. That's clearly demonstrating resistance in the $80 level, and certainly following through on the decline that we had yesterday suggests that we're seeing that a lot of the hedges that were put on against the possibility of geopolitical risk are now getting taken off. And that has obviously weighed on oil. It's also weighed on gold, and the price was down in a fairly chunky manner in here today, although still well within its range. Silver was also in negative territory. Then the other, I think, significant move was in the US dollar, and that was down in a rather abrupt manner. And it's most particularly fallen in this manner against the Taiwan dollar. So this has been really quite a significant appreciation by the Taiwan dollar and decline by the US dollar over the course of the last maybe 10 weeks, where it has appreciated by, or the Taiwan dollar has appreciated by more than 10%. Which is really a very significant move in a currency happening in really quite a short period of time. But there's perhaps a way of thinking about this as a pairs trade, because on the one hand, USA is one of the biggest producers as well as exporters of energy. So in many respects today, the US dollar is a petrol currency. And I think that is really starting to be priced in to the US dollar. On the other hand, the Taiwan dollar is a tech currency, and it benefits from a lot of demand for the exports of Taiwan. So when we look at the market response to what has, I think, in many respects been viewed simplistically, is that President Trump is knocking heads together in the Middle East and enforcing a truce between Israel and Iran. And that's certainly being viewed positively by the stock market, and the vast majority of indices today were up over 1%. So we're certainly seeing that the reduction in geopolitical risk is removing some of the demand for safe haven assets. So that has represented some downward pressure on gold, on the dollar. And then we have also seen was that treasury yields are still compressing